What is going on, everybody? Q here from Hyperstocks. Thank you so much for checking in. Today we're going to go over the S&P 500 or SPY ETF along with other different sectors that we're watching throughout the week. There's going to be a focus on what happened last week and what's expected for the week ahead, along with key levels to pay attention to in the market and key sectors and industries to pay attention to for the week ahead and for the rest of March. So without further ado, let's go ahead and get started with the S&P 500, and let's talk about the result that the S&P 500 had last week following the Fed's update to raise interest rates by 0.25 basis points. So the Fed's raised interest rates after weeks and weeks of a brutal time on the market. We saw markets take a 15% plunge in the last 4 months, and now we're finally starting to see markets moving back towards a level in which we would consider back in almost a bullish territory. So last week we saw the market come to a high of around 445. We haven't seen this high since the middle of February, and so we're back above the key levels, and I'm going to show them to you here. This gray line is the 200-day moving average, so you can see that the sell-off really intensified when we broke below it back in the beginning and in the middle of February. We can see that the sell-off intensified, but now that we're back above it, we can potentially use it as a new support coming into this week. So Monday or tomorrow, what we want to see is the market open above the gray line here, which is the 200-day moving average, and then the yellow line, which is the 50-day moving average, which means that the price action is above the average over the last 200 days. So if we can maintain those levels and maintain that 437 low, then it would be okay. So the pullback that we can potentially see coming this week can come to a low of 437 without breaking the uptrend that we were in, which is why I'm going to go ahead and put these back on. So the low of day on Friday was 437. We came down to that low, and then we bounced, you can see, which means that we need to hold that level in order to continue this uptrend. If we were to break 437, we can come down potentially to retest the lows of Thursday and the lows of Wednesday of last week, which were around 430 and then around 424. Preferably, we'd like to stay above 437 in order to potentially consolidate in this range, such as this, so we can potentially see something like this to eventually try to make our way back above 450 and above this gray line, which is the 100-day moving average. So overall, we're not in a terrible position. The S&P 500 rally comeback was actually pretty strong. We see that this is the daily chart. We can see that the MACD is beginning to push back towards zero. Above zero would place us back in the strongest possible bullish momentum. And then those green bars represent momentum building in the market along with this crossover. So this crossover also represents another bullish signal that we could potentially be moving higher this week. So many people are asking, why are we moving higher this week? If you watched our analysis last week on Sunday, also released about the S&P 500, you would remember that we mentioned that markets tend to reverse on the date of the event. So if there was a bad event happening in the market, they will come down in reaction initially, and then when the event actually takes place, we somehow end up reversing because we already priced in the expected move. So could this be the potential full-on reversal? Are we headed back to 500 from here? We don't really know, but you can see that we're clearly breaking out of this channel down pattern. So this channel down pattern has kept us kind of held down, but we're slowly creeping out of it. So as long as we can hold this range in the coming days and weeks, then we're in good hands. Even if we came down a little bit, as long as we don't retest the correction lows, then we're probably going to hold from here. Now, looking at the rest of the market for opportunity, we can see that there's a lot of movement in the EV sector. So stocks like Tesla, we see that they gained a ton of momentum upon the market recovery. So coming from a low of 755, they almost closed at 1,000. They actually closed above 900, which was very unexpected. But a stock like Tesla, once they see those buyers coming in, they end up rallying for a few days. And you can see that they did that here. Coming into this week, we want to see the stock open above this yellow line in order to potentially continue towards that 1,000 mark. As long as it's trading below this yellow line, it can potentially move back to retest this gray line. So this yellow line is a 50-day moving average. This gray line here is the 200-day moving average. So going into tomorrow, your primary goal is for Tesla to maintain a level above 850, so they can come down to test 850 and still consolidate, but they will need to break that yellow line, which is again the 50-day moving average, in order for them to break out of that 920 mark and push towards that 980 to 1000 mark. So that's just one of the focuses we have in the electric vehicle sector. We're also looking at companies like QS, which is QuantumScape. It's an electric vehicle charging company. We're also looking at Plug, Lucid, and of course GM. GM is providing what could be a potential great entry opportunity. Those of us in our group will receive exact entry and exit alerts on that one. Now looking at AMD and other tech stocks. So for tech, we're actually focused on the following names. We're focused on AMD. We want AMD to be back above its 200-day moving average. So you see how last week for Wednesday, Thursday, and Friday, all 3 times it got rejected right below this gray line, which is the 200-day moving average. So going into this week, we want AMD to kind of break out of this channel down pattern here and make its way above this gray line to potentially move towards that 120 mark. We're very bullish on AMD going into this week. We're also very bullish on NVDA. As long as markets continue to hold their levels, we expect these two to actually move. AMD lagged behind the market on Friday, and that was likely because of that 200-day moving average. So going into this week, if they gap above that point, they may very well see a rally towards that 120 plus mark. Other than tech stocks, we're also looking at Chinese names. So Chinese names had a massive rally last week with BABA up over 30% for the week. You can see that there's another crossover on the MACD. Momentum is starting to pick up, but we wouldn't necessarily call BABA safe until it's above that 115 mark, which is the next significant resistance, which is also their 50-day moving average. So we want to see them above that line. BABA is one of those companies that's actually considered pretty cheap right now, considering they're only trading at a 27 multiple, and their revenue is growing immensely. So they are a cheap company. If you are a long-term investor, the only thing I would say is be careful of owning too much of foreign investments, because this is a Chinese company and things can change fast. We're also looking at NIO, which also falls in the Chinese and electric vehicle sector, which also rallied a significant amount last week. It rallied almost 40%, and it's moving towards that $23 to $24 resistance point. And finally, one more sector we're watching is going to be the vaccine sector. We're seeing opportunities in Pfizer, in Moderna, and in J&J or Johnson & Johnson, which our members also have received entry and exit alerts on those as well. Now, if you guys are interested in seeing more of these videos, please like and subscribe. We do this every week. We try to update you guys on the market every week. Moving back to the S&P 500 or SPY here, then the main other focus for the week would probably be earnings. So there are some significant earnings coming out this week from companies like Nike, which is going to impact the retail sector. So retail is something to also pay attention to. But other than that, last week's federal meeting or FOMC meeting was a major focus for the markets. It has been a major focus for the markets for the last few months. I think markets are just relieved to finally get an answer from the Fed of their plans around interest rates and inflation. But keep in mind, there's also a looming news event that's currently happening in our world, unfortunately, which is the Ukraine-Russia situation. So as long as that Ukraine-Russia tensions are up, you're going to see markets kind of experience volatility, but volatility brings opportunity. The best way to approach is to not have too much exposed. Make sure your trades are very selective. If you're looking at a sector, make sure the entire sector has momentum and not just one stock in that sector, because an overall sector momentum will likely lead the entire sector to push higher more safely. But if you guys, I hope you guys enjoyed this video. If you guys want to see more of these videos, please like and subscribe. Thank you so much for checking in.